there is a tax being levied on the American consumer that doesn't show up on a 1040 form. It isn't debated in Congress, but it is currently hollowing out the retail sector from the inside out. In the last 7 days, the stagflationary slump became a reality. While the headlines focus on the Strait of Hormuz, the true casualty is the American discretionary budget. Today, we expose the invisible tax and the specific stocks that are about to break. Gasoline is a regressive tax, with the national average spiking over 20% this month to $3.63. It hits the hardest where it hurts the most. For the bottom 60% of earners, 4% of every paycheck is now dissolving into the gas tank. But it's not just the pump. The American consumer is hitting a credit wall. Total credit card debt has surged to a record $1.28 trillion. With interest rates frozen at over 21%, the buy now, pay later fuel that drove 2025 has finally run dry. We are witnessing a violent K-shaped split. The top 10% are still spending on luxury, but the middle class is trading down to private labels just to keep the lights on. Who breaks first? Watch the volume models. Companies like Target and Walmart thrive on frequency. But when the national average for gas hits 360, those extra trips for wants become non-essentials. Then there's the aspirational middle. When the invisible tax takes $50 a month out of a household budget, the $7 latte and the $100 leggings are the first to go. Starbucks and Lululemon are no longer growth stories, they are survival of the fittest plays. And finally, the mall anchors. Kohl's and Macy's are staring into a stagflationary perfect storm. High shipping costs from the Middle East are raising their prices, while their customers' wallets are being emptied by the energy tax. It is a pincer movement with no clear exit. The Fed cannot print its way out of a supply shock. And as consumer sentiment falls to a 2-year low this March, the market is beginning to realize that the soft landing was an illusion. The invisible tax is here, and it's just getting started. If you want to survive the cracks in the system, you need to stay ahead of the narrative. Subscribe to Market Pulse 180. This is our briefing for today. Stay sharp.